Hello, I'm Brian Scott-Smith reporting for World Risk and Insurance News. In this program, Warren Buffett releases his letter to Berkshire Hathaway shareholders. Proposed changes to US taxes will affect reinsurer tax havens. A statement by the Cayman Island Premier sparks a war of words in Bermuda. In another edition of Best Day on RIN TV, we share highlights of a two-part interview with insurance specialists from Deloitte. And RIN TV goes twice a week. This and more from the online video news network for the global insurance community. You're watching World Risk and Insurance News.
From our news bureaus around the globe, this is World Risk and Insurance News.
We start with financial news. The long-awaited letter from Warren Buffett to Berkshire Hathaway shareholders revealed fourth quarter profits off 30% as insurance units struggled and derivative bets did not pay off as expected. Still, Berkshire's non-insurance businesses were able to generate record earnings in 2011, which helped the firm post $10.3 billion in net income. While the Oracle of Omaha did not name a successor in his letter, he did say when a transfer of responsibility is required, it will be seamless. Among those thought to be in the running, Ajit Jain, who runs the highly profitable reinsurance group within Berkshire Hathaway's empire. In international news, President Obama's 2013 budget proposal would lower U.S. corporate income taxes, but also eliminate a number of exemptions and subsidies, including tax deductions for reinsurance premiums ceded to foreign-based affiliates. The plans were received positively by U.S. insurers, but negatively by Bermuda reinsurers, who would see an increase in their U.S. tax bill. The battle of reinsurance domiciles in the Atlantic heated up recently when the Cayman Islands Premier McKeever Bush said his jurisdiction could win Bermuda's reinsurance industry with more favorable immigration laws and land ownership policies, touting a decision not to pursue Solvency II compliance as a benefit. When Bermuda's shadow finance minister Bob Richard replied to those comments, it prompted a war of words with Bermuda Premier Paula Cox, much of it over Bermuda's efforts to be Solvency II compliant. If you'd like to see full comments made by Bob Richard and Premier Cox, visit our on-demand library. And now to another contribution from AM Best. In this edition of Best Day on RIN TV, we have assembled highlights from a two-part discussion with Rebecca Amoroso, Vice Chairman and Deloitte's U.S. insurance industry leader, Howard Mills, the former Superintendent of New York State's Insurance Department and now Chief Advisor with Deloitte, as well as Sam Friedman, Insurance Leader at Deloitte Research.
We still have a sluggish economy. Unemployment is still relatively high.
The uncertain regulatory environment, a lot of still questioning what's going to happen, what should they be doing to prepare for uncertain regulatory regimes.
Carriers can anticipate spending a lot more time with regulatory compliance, a lot more money.
We've just seen recently Solvency II put back by the Europeans for another year or two. And of course, the NAIC and the United States regulator community has come forward with its own solvency modernization initiative.
Definitely some insurance carriers will be designated as systemically integral to the economy, and they'll face a whole new set of regulations.
One of the ways they're looking to buck economic trends is to really look to go into new markets. And we're seeing the growth of the middle class in places like Brazil and India and China are offering very attractive options for insurers to go and try to grow organically.
For the Far East, for example, you have Thailand, you have Indonesia, you have Malaysia, even Vietnam.
Eastern Europe, another one with great potential.
If they want to be more ambitious, they can expand through mergers and acquisitions, introduction of new products and services, or tweaking some of the existing ways that they do business with their customers.
We're seeing a lot of focus on new technologies and predictive analytics.
Cloud computing is a huge opportunity for insurers to increase their computing power.
They can reassess how they distribute their products, for example, by either adding new distribution options or enhancing the people they already have in place.
Insurers need to do what they can to attract talent and make sure that they are getting the talent that has the skills that's going to be required in the future.
Essentially to re-engineer how they do business so that they can differentiate themselves, so that they can remain competitive and keep growing no matter what the state of the economy is and no matter what the state of their individual market may be.
To watch the entire two-part edition of Best Day with industry experts from Deloitte, go to the RIN TV On Demand library or to ambest.com. Well, that's our programme. We'll be back in 2 days with another report as World Risk and Insurance News goes to twice a week, bringing you even more timely news and features. In our next programme, we introduce a new series called Legislative Briefs, where we will look at new legislation and court decisions affecting the insurance industry. We leave you with a look at the industry events taking place in March 2012. If you would like to add your events to the RIN TV Industry Events Scroll, simply send your contribution to media@rin.tv for consideration. I'm Brian Scott Smith reporting from New York. Join us next time for more world risk and insurance news here on RIN TV.